Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and watching our Market Chameleon webinar series. Before we get started, let's take a look at the share disclaimer. Please be aware that neither Dimitri, Market Chameleon, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer. And let's welcome Dimitri Pargamonic to the stage. He's going to be talking about screening for call spreads with technical indicators, finding bullish setups. How you doing, D?
Good morning, Will. How are you?
Great. Let me share your screen.
Good morning.
And there's the Market Chameleon landing page.
All right. And what we'll do is, let's first navigate to the call spread screener, and then we're going to use some filters that are stock technical indicators, and this will just help us narrow down bullish call spreads. And on top here, we see the main menu. Let's click on screeners, navigate to bull call spreads, click on that. And what you'll see is the filters up top. We have different tabs for our filters. And then below, we have different combinations of call spreads. So you could see here a lot in NVIDIA, because this is sorted by highest market cap. And over here, if you go from left to right, we define the call spreads. So November 21st, buying the 235-240 strike. That's one combination. November 21st, 232.5, 237.5 strike. So you can see lots of different potential combinations. Right now, we're defaulted to the next monthly, but we could change that by clicking up here on expiration and picking a different expiration, or all the expirations available within a certain time range, like over here. But in this example, what we want to do is combine a stock technical indicator along with our option call spreads. And to do that, we have a few different indicators up top. So if we go to this tab, underline stock ideas, over here, we see different types of technicals over here. And I'm going to just change the tab up here from the summary to technicals. So we kind of have some of them listed out here. And here we see kind of a moving average indicator. This is a one-day support resistance from 52-week high, 52-week low, and the option order flow sentiment. And the idea there is just to see if we could line up strong technicals with a bullish call spread that we particularly maybe see as an opportunity. So I'm going to come up here, and we could see, for example, stocks near their 52-week high. If we're looking maybe for bullish, and the idea as well, are stocks that have been strong, may remain strong in a bullish type market. So we could click on here and kind of see if we could find a stock maybe that made a new 52-week high. So it's trading today above the previous, 52-week high in the morning. So if we click on that, maybe we could find some here. So you can see here, now we got these stocks, WELL, BP, and so forth. Or we could do look within 1%, within 2%, and that will expand the range where maybe it didn't make a new 52-week high on the day, but it's still within a close to its 52-week high, maybe within 1 or 2%, for example. So I'm going to click back on any just to expand all of them. And you know what? Maybe what I should have first done is narrow down these call spreads. So I'm going to go back to the summary, and what we'll do is just to narrow down the symbols. Let's first look at call spreads, okay, that show a theoretical edge based on historical stock moves. So what we'll do is say, well, show me the best call spreads available where the pricing of the call spread looks attractive based on how the stock moved historically, where, you know, if we took historical moves and created a theoretical price of a call spread and we compared it to the market, it looks attractive. So what we'll do is come back to this summary here. And you see here, show best buy. We'll say, show me the best spreads based on theoretical edge. So we'll click on that. And what those will do is just narrow down the potential spreads by symbols. You could see for NVIDIA, we have this November 21st, 235, 240, Apple, Microsoft. So this way it kind of removes the other combinations by just showing us the best one by the theoretical edge, which is the difference between the market price and our average price based on those historical stock moves. So now that we did that, let's go back to our indicators. So we're going to combine, let's say we try to use that as our initial basis for, you know, potentially attractive spreads. Now we'll come back and say, well, what do the technicals line up, right? With certain technicals we're trying to find. So we'll come back under underlying stocks, and we did the 52-week high. Maybe we want to see a stock that is showing strength from the opening price. So sometimes stocks, you know, they'll open at a price that's lower from the previous day because there's just an imbalance of sell orders, or it could open higher from the previous day. You know, there's an imbalance of buy orders. But if we use that as our new initial reference point, and we say, okay, you know, whatever it opened at, if we use that as a reference point, the order flow in the stock from the morning, is it showing more bullish or bearish? Is the order flow pushing the stock higher from that point or low, right? So we could look at it from that perspective and say, well, if the stock is up 1% from the open, then it's showing, you know, demand, you know, for that stock. So let's say we did that up 1%. So now it's going to refilter. Now it's showing us where the stock itself, even though, like, for example, NVIDIA was down on the day, but it's up 1% from the open. So it started down, but then it started to get bid up from that open. So we could use that as, you know, a potential technical strength. And you could see here now, you know, we have NVIDIA, XOM. So now we narrowed down the candidates based on what call spread it looked attractive based on those historical prices, and the stock itself showed strength from that open. Another way, we could just remove that or keep that, but let's just remove it. And another indicator on this screen could be stock ideas. So if you hover over it, there's three of them. One is market leaders, market laggers, and momentum stocks. So market leader is just showing us the top 25 best performing stocks in the S&P 500 that are responsible for most of the S&P 500 gains. So the idea there is if the market continues higher, it will be led by those top stocks. So if we did that, said market leaders, now it shows us the market leaders: Nvidia, Apple, Microsoft, Google, Amazon. So these are the stocks that have led the S&P 500, higher. So sticking with those is a theory where these were the leaders. Market this is where the funds have been flowing. They've been responsible for the S&P 500 strength. So if that continues, and we find good bullish call spreads, that kind of lines up two things: technicals and the bullish call spread. We could remove that and look for momentum stocks. So momentum stocks don't necessarily have to be the ones that are leading the S&P 500, because even to lead this S&P 500 higher, you'd have to have a higher market cap, and be an S&P 500. What if we just look for momentum stocks? They don't necessarily have to be the highest market cap or even be in the S&P 500, but they're displaying strength by making higher highs and higher lows. Okay, so we're looking at different periods, like 6 months, 3 months, 2 weeks, and seeing if they're moving in a pattern where they're making higher highs and higher lows within certain periods. We call these momentum stocks. So again, you will see some of the same ones: Nvidia, Apple, but this will list more than just the top 25. We got 125 stocks in here. Okay. Let's let go of this one. Go back to any. We could also add sentiment from the options. So just like we did kind of with the stock, and we measured, well, is the stock displaying strength from the opening price, right? So if that's the case, the theory is, well, there's more demand for the stock since it's getting pushed higher from that initial price. The idea there is, what about the option order flow? Does the option order flow, if we convert it to delta and kind of interpret the way it's flowing, is it also showing a bullish sentiment, right? So if it appears where, there's a lot of demand to bid up calls, selling puts, bidding up calls, that's displaying that the order flow is bullish. So we could also look at that, bullish delta, over 40,000 deltas, 100 or any. So for example, 40,000 deltas. Now we have option order flow where over here it's displaying on balance. If we take the positive and negative, on balance, it's more bullish than bearish. I'm going to let go of this one. And a common technical indicator is also just comparing how the moving averages, right? Because we're smoothing it out and we're saying, well, how do we know if it's in an uptrend? We're comparing the prices versus moving averages. And we have, if you hover over it, these different moving averages in the descriptions. So let's say we're looking for stocks in an uptrend, right? So in an uptrend would be where all the moving averages are crossed in a bullish manner. So 20 days above 50 day, 50 day above 250 days. So they're all crossed. The stock is above all those moving averages. So it's in an uptrend. Click on that. Right. So this is now showing us all the stocks that are in an uptrend, and where we filtered out those particular call spreads, right? All these call spreads based on the criteria of the market price is below our theory, or the best ones relative to our theoretical value. So that's the idea behind combining call spread opportunities based on the call spread criteria and technical indicators on the stock, right? Because the technicals are just looking at the stock behavior alone, you know, or separately than the options. Will, I'll throw it back to you at this point.
Yeah, great job, D. Another wonderful webinar. Thanks for bringing these to the Chameleon community. We'll see you tomorrow, my friend.
All right. Thanks, everyone, for joining. Stay safe and hope to see you guys tomorrow.
Actually, tomorrow we also have the Market Chameleon webinar with IBKR, right?
Yep. Yeah, so maybe put out that link.
Yeah, I'll put out that link. That's at 2 p.m. tomorrow. I'll put out that link. Will have to register on IBKR's website. And all right, D, great. We'll see you tomorrow morning, my friend.
Yep. Thanks, everyone. I'll see you later.
All right, have a great day, buddy. All right, everyone. I also put into the chat the link to the after-hours show that's going on with Ryan today. Let me grab the IBKR webinar link so I can put it in there. Again, I apologize for the chat problems today. It was a new feature on StreamWeb, and I'm not sure why it created two videos. Let me get the link real quick. All right, it's screening for option straddles is today's webinar, or excuse me, tomorrow's webinar. And that's at 2 p.m. And you need to register on IBKR's website. And that link is now being popped in the chat. So go on and register for that. We will see everyone hopefully at 4:30 today with Ryan. He looks at the market and after hours, and he shows how he uses Market Chameleon in combination with his product, Options Robot. Always an interesting webinar, and bring any questions. He likes answering questions. So everyone have a great, safe trading day out there. Hopefully we'll see you this afternoon. If not, we will see you maybe tomorrow morning or on the IBKR webinar. Busy couple days of webinars. Have a great day. Bye-bye.